Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Jp Thieriot. He's the CEO of Uphold. COVID-19 has sparked a surge in demand for digital payments, and we're going to discuss if this is the end of paper money. JP, it's great to have you with us as always. Tell us a bit about Uphold.
Well, thank you for having me. So Uphold is a global digital money platform. We're in about 180 countries. We passed our $6 billionth transacted a couple of weeks ago, a little over 2 million users, and growing at a rate of about 7,000 users a day at this point.
So have you seen a significant surge in demand for digital payments?
Yeah, absolutely. I mean, apart from what was already the trend prior to COVID, I think COVID has, accentuated some of the driving trends. So, obviously banks operate through branches, physical contact, walking to ATMs, writing checks being delivered in the mail, all that stuff sort of already on its way out. But when people are homebound and need to get money to loved ones or buy things from Amazon or the local non-Amazon grocery store, et cetera, it all relies on electronic payments and sort of changes the nature of the game. Not to mention the notion that banknotes can potentially transfer germs. There's just not a lot of people walking around and paying each other with the value coming out of their pocket, and hand to hand. And I think countries that are more cash dependent than the United States are feeling it and feeling the change, more pronouncedly than perhaps in the States, which was already well on its way to being, e-commerce oriented and fairly electronic.
So do you think it could be Bitcoin's moment? Everybody is talking about the halvening, which is taking place in just a couple short weeks.
Yes, this should absolutely be Bitcoin's moment. Obviously, Bitcoin was created as a response to the last major global financial crisis, and this one seems to be coming with somewhere between, call it, I don't know, 2.5 trillion on the low side, maybe 8 trillion on the high side when all's said and done, in direct currency debasement. So plays right into the underlying theories behind Bitcoin. I've in fact been somewhat surprised that Bitcoin has tracked so closely with the ups and downs of the equity markets, but it seems that in these last few days, maybe it's starting to decouple. And if it starts to decouple going into a May halvening, I think that's an attractive confluence of events.
Yeah, that's a good point. Let's talk about stablecoins and the end of paper money. So a couple questions here. Why do we even need paper money at the end of the day? Like, is there really a reason for it, assuming that the technology exists? And do you think this is really going to be the rise for stablecoins going forward? Like, there's no looking back.
Yeah, it's interesting. I mean, I think, between paper money and stablecoins, there's also, obviously conventional electronic versions of traditional fiat. But as relates to the paper version, the paper version has traditionally been the currency of, folks involved in remittance flows, usually on the receiving end, that aren't well serviced by financial institutions. So money is held in a shoebox, under a bed, as opposed to in a bank account, undocumented workers, so on and so forth. So in the measure that these people become, enfranchised and have a safer and more convenient alternative to dealing in cash, which is dangerous and inconvenient. I mean, that again is hopefully the way we were heading even before COVID. Stablecoins, interestingly, I think are sort of a reflection of the shortcomings of the traditional financial system, nearly as much as they are a reflection of interest in crypto. Traditionally, stablecoins were there to speed up a cycle between, say, US dollars and Bitcoin, wherein, if you look at the early days, you'd make a transfer via ACH to buy a Bitcoin, however many days in one direction, you'd sell the Bitcoin and the same number of days in the opposite direction. So you were talking about, more than a week's cycle. So stablecoins were essentially created, or I should say, not necessarily created for, but the first, big use case was people looking to speed those cycles up. So the growth in the current interest in stablecoins is a reflection both of, interest in what you just talked about, which is to say perhaps Bitcoin or other cryptos as a hedge against currency debasement. But it's also, perhaps reflective of general dysfunction with traditional fiats in lots of different aspects.
Tell us about the Uphold Stablecoin Center.
So the Stablecoin Center, which we announced today, is meant to be a place wherein people can easily exchange between and out of the stablecoins they're in. I think the thing with stablecoins is that they've gotten better as time has gone on. So, for instance, the one that we're firsthand involved with, UPUSD, has a transparency page. Like Uphold itself, people are able to confirm on a minute by minute, day by day basis how much is being held in reserve, and that amount is being audited and certified by Certicay. So you have a product that is arguably vastly superior to the earlier stablecoins, and so providing a place where one can seamlessly move between and choose and have a wealth of options is what we've tried to create, and hopefully each of these will sell themselves on their strong points. But in general, versus traditional fiat, or again the earliest of the stablecoins, the new ones have transparency. They have low friction in terms of conversion, and maybe most relevantly to people who have dollars in legacy bank accounts, some are offering markedly higher interest yields than would otherwise be available.
All right, JP, great to catch up with you as always. Thanks so much for joining us on Trade Talks.
Thank you so much.
All right, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.